Ms. Apodaca, are we ready in the back?
Oh, yes, we're ready back here.
And Madam Court Reporter, are you back from lunch and ready to, your fingers rested?
Yes, sir, we're on the record.
All right, great. Okay, I believe I see a familiar face there on the platform. Is that John Macbeth I see?
Yes, it is, Mr. Hearing Officer. Mr. Macbeth is on the platform.
Mr. Macbeth, you're on mute.
Mr. Macbeth, can you hear us? I'll text him to make sure his sound
Yeah,
is set
Mr.
up.
Rankin, you may want to double check that he's connected to the sound.
Mr. Macbeth, can you hear us now? I think he's working on it.
Can you hear us
hear
now?
me?
Yeah.
Okay.
Okay, sorry about that.
Mr. Macbeth, it's been a few days, so just to err on the side of caution, I'm going to put you under oath again. If you would raise your right hand. You swear and affirm the testimony you give here today will be the truth, the whole truth, and nothing but the truth under penalty of perjury.
Yes, I do.
All right, Mr. Waymeyer, take it away with your cross-examination.
Thank you. Mr. Macbeth, can you hear me okay?
I can hear you fine.
Okay, perfect. And I'll apologize in advance for the cumbersome procedure with doing this remotely. And so much time has passed. I think when we left off last time, we had moved in your analysis over to talking about commodity price as part of the economic case. Does that square with roughly where you think maybe we left off? We were talking on price.
I think that's right.
Okay. And again, just in terms of your economic model, we did cover this, but I just want to hit a couple high points so that the commissioners understand kind of what you did. You obviously had the economic case that was prepared by Empire in the first instance, which had as part of the economic case assumptions in it like pricing, and had assumptions in it like operating costs, had CapEx in it, had curves for recovery factor, and then obviously had volumes, oil in place volumes to start with. Is that generally square with what you remember in terms of the economic case you had from Empire?
With a couple of little comments or corrections. So there's not really a recovery curve. There's a dimensionless curve. And if you stop the CO2 injection at a particular time, that will define recovery. That's how it works in the model. And so with that clarification, I think I agree with what you said.
Okay. And so just coming back, obviously you had critiques of the model, but you did not build your own ground up economic case here as part of your work, did you?
I did not build an independent model. I used Empire's as a starting point and then made corrections to it.
And so there's been this, we talked last time, and again, I'm not going to rehash everything we covered last round, but at a real high level, you did not build your, you critiqued the dimensionless curve, but you didn't build your own curve.
No, I did not.
And then with respect to operating expenses, you didn't do a ground up operating expense analysis. Basically, your chief criticism of Empire here was their use of $1 MCF on CO2.
Okay. So you're calling the CO2 expense an operating expense. That's right, because the assumption was, and this comes from Mr. West's deposition, that because of 45Q tax credits, that he thinks he can get the CO2 for 50 cents an MCF cheaper. And so I was concerned about the certainty of that assumption. And so to show the sensitivity of the economics to this factor, I ran it with and without that 50 cents.
So basically the difference between $1 and $1.50.
That's one of the variables I changed. That's right.
And I'm just trying to bracket this for the commissioners to simplify the remainder of the testimony so that we know the points we're fussing over and not. Other than moving CO2 from $1 to $1.50, and if you have I put it in a OpEx or an expense category, is there a better way I can speak to this to be more accurate?
I think it's broken out as a separate CO2 expense in the model,
Okay.
but I just wanted to make sure we were on the same page because I didn't change any of the other OpEx numbers in their model.
Okay, but so as we talk about the expense case, you didn't change anything on CapEx, did you?
I did not.
And you didn't change anything in any of the OpEx case except for under your model, you ran it as $1.50 CO2 instead of $1 CO2.
Correct.
Was there any fuss on the volumes of CO2? Did you quantify that in your analysis?
I did not. I did not touch the volumes versus recovered oil. Well, let me just make a clarification. In my corrections, because you changed the hydrocarbon pore volume of each pattern, when you change the porosity and the saturation, you reach the amount of CO2 that's required for those lower hydrocarbon pore volume runs is going to be less just because you've reduced it and the model is set up to shut off after 3 pore volumes, hydrocarbon pore volumes of CO2.
Whose model?
Empire's model.
And in your model, did you adjust that?
It automatically adjusts so that it stops at 3 hydrocarbon pore volumes of CO2.
So your model is the same or different? And if it's different, in what way?
Well, I think we're talking past each other, and I was trying to be helpful with this clarification, but maybe it wasn't all that helpful. All I'm saying is, if you compare the unadjusted West run, the one that we were given from Empire, if you compare that to my runs, there's less CO2 because the hydrocarbon pore volume is reduced when I adjust the porosity and the oil saturation. Because I stopped it at the same hydrocarbon pore volume, 3 pore volumes, which equates to the same recovery factor.
Okay, so you actually use less CO2 in your model?
Yes, that's correct.
Okay.
In certain runs, that's right.
Okay. Just as we talk about variables for the commissioners to simplify this down in terms of, what the fuss is, really on all of that expense case, the volumes of CO2 are pretty close. Don't move the endpoint that much. It really here is that change over $1 CO2 versus $1.50. Is that generally fair?
I don't think I made the runs with only the CO2 price changed, which I'd have to do to answer that question because I kind of accumulate the changes. I either use a flat price, a futures price, and then with and without the CO2 change.
And now I'm confident we talked past each other. I'm not getting to revenue yet. I'm just focused on the expense side. And so if we're just talking about everything on the expense side, and we've covered, you didn't build your own model. What you've done is started with the Empire model and critiqued it and adjusted dials as you saw appropriate. On the expense side, is the only dial you adjusted the cost of CO2?
That's true on the expense side.
And again, we'll just cover this at a high level so that we've got it framed up. On the revenue side, the only thing you changed was running it at a couple different price decks. One would be a flat deck, and one would be a NYMEX that actually would move oil prices to less than a flat deck on out years.
Those are the changes I made to the price deck. But again, you mentioned revenue in the first part of that question. And price definitely affects revenue, but so does produced volume. And when I adjust the hydrocarbon pour volume for each pattern, that means we're producing less oil. So that has an effect on revenue too.
Okay. And then by way of volumes, the volumes of recoverable hydrocarbon, all of your volumes, you didn't do a ground up reserve analysis there. You used the volumes that came from the work of Dr. Davidson and Mr. Knights. Is that right?
I think it's going to be exclusively Dr. Davidson.
Okay. So, and now I kind of just want to dig into each of these, but are there any other variables between the work that Empire did versus the work that you did that you think important to point out before we start talking about these categories of differences?
On economics?
Yes. I'm not talking about barriers or anything at this point, just economics of the CO2 EOR project that Empire has presented the commission that it intends to carry out.
You've covered all the changes I made to their economics.
Okay. So let's just take the volumes very briefly. You heard that came from, you said you got those straight from Dr. Davidson?
Well, I got the log files from him and then I did the averaging myself.
Okay. But again, that was all of his work. That was what we heard here in terms of the petrophysical analysis and the facies changes and that sort of thing, right?
That's right.
And just so I know how much you've heard, and I know you've been remote here, have you been monitoring all of these proceedings since you haven't been actually here in the examination room?
For the most part, not every single minute, but for the most part, I've either had my phone with me or here at my computer.
Very good. Now, by way of facies selection, you by training and education and certification are an engineer, right?
That's true.
And I think it was covered at the deposition that, you could look at a log, but you being an engineer, you're never going to be the guy that actually goes in and is picking tops, right?
I don't recall if that came up at the depot, but I mean, I do pick tops in my work sometimes. So sometimes they're easy, sometimes they're not easy.
In a situation like this, in terms of picking the top of the San Andreas or the Lovington Sand, the lower San Andreas, that's nothing you've done here, correct?
Except for 3 wells that are mentioned in my original statement that surround the 211.
Those 3 wells being what?
There are 3 water supply wells.
In what
I think
method?
it's 457, 458, and 459 from memory, but they sort of form a triangle around the 211.
What was your methodology used for picking those tops?
Well, on those ones, I went and looked at what the original operators had picked and used those tops. If that's not picking a top, then I'm not going to argue with you.
Yeah, and I think we talked a little bit about, the difference between looking at and analyzing, but in those instances, you just went to the commission file, took what the operators used and adopted that.
That's true. Yes.
Okay. So you weren't looking at core, you weren't correlating logs. There was none of that kind of work as part of that.
That's absolutely true.
Okay. Given that Dr. Davidson chose a facies model, and you heard that he didn't do any of the geology work here, and did you actually hear his testimony that he is not a geologist and would not purport to opine as a geologist?
I think I remember him saying he wasn't a geologist.
Doesn't that give you concern that he built an entire facies model with respect to his petrophysical evaluation and is not a geologist and didn't do any of the literature searches, any outcrop studies, any lay eyes on the actual cores. In terms of your model being, your economic case being wholly dependent on his work, doesn't that give you concern?
No, my discussions with him about the way he analyzed the different intervals suggest that it was rigorous, that it was based on standards that have been around for a long time. That doesn't give me any concern at all.
With respect to N values in an Archie's equation, those are things that you use as part of your work.
Yes.
If you're seeing N values that are up over between 10 and 113, would that give you concern about the reliability of that data and how it should be used?
Well, tell me what formation we're in, and I'll answer that.
San Andreas?
Well, I think there's a really good discussion in Dr. Davidson's original statement. There's an appendix about the different types of saturation models that have been developed. And he discusses why Archie's doesn't work well in oil wet intervals. And so, we're talking about Archie's and maybe back calculating N's in zones that are either not reservoir or very poor reservoir, or perhaps leaning towards an unconventional zone. So I don't know the utility of back calculating an N and then using that as a basis to throw away some core information.
Well, with respect to Dr. Davidson's work, you certainly can back calculate an N out of that, can't you?
I suppose, looks like somebody did it. I haven't done that. I haven't looked at it.
And with respect to plotting the measurements from core, and I don't want to beat this dead horse, but with respect to the core here that we have out of the 679, you don't know how the core was handled, right? How long it sat around before they got around to measuring?
Personally, I don't know.
And so you know that the lost oil will vary by a number of factors, including things like gas expulsion.
I generally know that, but that's not a huge portion of my practice.
Okay.
Looking at cores and thinking about cores.
Additionally, just in terms of how long the core sat around, that could also through evaporation or otherwise lead to loss.
I suppose it could if there were extremes to that. In my experience, when cores are taken, they're usually they're expensive, so they're handled carefully and sent off to the labs pretty quickly.
In this particular instance, so on the plot where you have N's up to 113, that would be part of the data plots that Dr. Davidson used. Again, just the first question I had that kind of started this, based on your work, I mean, if you're seeing an N that high, I mean, isn't that kind of a red flag that you think something is wrong here with the data point?
Well, honestly, I didn't see a chart that had N equals 113 in it. Maybe I missed it when you were showing that to Mr. Knights. But I think back calculating N's using Archie's in an oil wet carbonate, I don't really understand the utility of that.
As we continue to talk about volumes, you heard the testimony that if it had less than a 20% oil saturation for the interval, all of that oil would be excluded from the oil in place case of what Dr. Davidson gave you. Yes.
I heard a lot of questions about that. I'm not sure I'm familiar with how that math or those summations were done. I just don't know.
Stated differently, in terms of your opinions here, as in the economic case, if you don't know whether oil saturations below 20% would have been excluded from the oil in place volumes that you used for your economics. True?
Oil in place. So I took my averages directly from the LAS files that I got from Dr. Davidson. I don't know if those LAS files and that process is where this reduction that you're suggesting occurred, or if it occurred once a subsequent calculation was made for oil in place. I don't know.
Yeah, and again, that's, I think exactly the question here is, with respect to the files that you got and the oil in place volumes that you used for your economics, you don't know one way or the other whether all of the oil under a 20% saturation interval would have been excluded from that. You don't know that one way or the other as you sit here, do you?
I don't know.
If it was excluded, you would agree that some of that oil in an EOR is actually going to be recovered here, wouldn't it?
Which oil are we talking about?
Oil that would be between 0 and 20% in saturation intervals of 0 to 20%. And I'm not saying you're recovering all of it, but some of those volumes would be recovered.
Depends on if you could efficiently and effectively contact it with CO2.
With respect to miscibility studies or the effective contact, is that anything that you've done here?
I have not. I have noted the absence of miscibility studies in the work that Empire presented and the data that they gave to us, and the
But again,
importance of miscibility.
and I apologize, I'm stepping on your answer just with this remote procedure. I apologize for that.
I paused. That's my fault.
Now, so again, if the commission wants to see a recovery factor here, that in your models, that's not work you've done. That's not a variable between the Empire work and your work that we have to fuss over, is it?
In the economics?
Yes.
That's true in the economics. I did some recovery calculations on the tall cotton.
But again, in terms of the economics presented to the commissioners here for the actual EOR development of the EMSU, you haven't done that. True?
That's true. I didn't mess with their recovery factor. I didn't. I left it alone.
And we talked about tall cotton, and that has come up in both Dr. Davidson and Mr. Knight's testimony. I'm not going to beat that dead horse again, but when we showed the graph that came out of the Goodnight presentation, you remember it tracks that tall cotton production and then it falls off.
Which Goodnight presentation are you talking about?
I actually think maybe the same graph has been shown multiple times, but I think maybe even you showed it. It's the green plotted graph of tall cotton oil production.
Yeah, my graph is different than Mr. Knight's. He did it on a log scale. Mine's Cartesian rate versus cume, but they are both green. I'll give you that.
Yeah. Okay. Let's talk about yours because you're familiar with that one for sure. And I just want a reality check because there's been testimony from Mr. Meltzer about fracking in the injection wells. But as an engineer, just knowing what you know about EOR projects, if you're looking at that curve off of actual data points, wouldn't some flag go off in your head that there's an engineering technical explanation for this, as opposed to a typical decline that you would expect through the production of hydrocarbons?
I mean, there are some jumps in that curve. It's a relatively small project. Normally when we're looking at data relating to a CO2 project, there's going to be many more wells, injectors, and producers. So the effect of one or two wells would probably be muted on most of the curves we look at. Tall cotton's a little smaller, so one or two wells coming on or off or having a problem could impact that curve like we see those changes.
Yeah, and that's just in terms of reality checks here. As an engineer, if you just look at that graph, you're going to go looking for some kind of a technical engineering operational explanation, as opposed to there just being no more hydrocarbons to be recovered. I mean, wouldn't that flag to you that this is something that needs to be investigated from an operations technical perspective?
Well, the reason we looked at tall cotton is it's unique because you don't have very many opportunities to look at production data and know that it only came from an ROZ. You know, if you're in a field like Wasson or Seminole St. Andrews, where there have been ROZs, they're almost always lumped with the main pay. And they're also, you have the problem in Texas where you don't have individual well production. You've got one production number for the entire unit for the month. That's why I looked at it. Now, I heard one of Empire's witnesses talk about the allegations of problems with wells, but you know, that typically when stuff like that happens, there's not going to be a filing at the Railroad Commission for me to go look at. Operators don't memorialize failures like that typically, so I don't know where I'd go to look to investigate that.
And I don't think I got an answer to my question. This is a simple yes or no. As an engineer, if this project, if somebody brings it to you and says, look at this curve, just looking at that curve and how it drastically departs, you can't draw a nice clean line through it. As a good engineer, isn't there going to be a flag that you say, I want to dig farther into this? Now, I'm not asking about what's publicly available, but wouldn't you have a flag that makes you suspect that there's something technical ops, engineering that would explain that decline?
I don't have it in front of me, but if you look at the part of that curve where I did put the line, it is, I am comfortable extrapolating those operations out into the future. And I took it to a 0 rate, which is conservative. Nobody's going to produce down to 0 because they can't afford the OPEX to do that. So there's some stuff going on prior to that, but that's also in times where we're adding 10-acre changes and we're adding additional wells. So I really don't see anything in that plot that tells me I shouldn't extrapolate that into the future.
And my question is, if you're looking at this for a client, it's not something, you're telling this commission that graph is not anything that would trigger something in your head that says, I need to investigate this from an ops technical. Is the answer to that no? You're satisfied with it? You would take.
If you look at where I extrapolated that, there's nice, smooth data. So the answer is no.
Now, moving over to the CO2 case and that variable, you say not $1.50, and the 45Q credits is your basis for that difference?
For that difference, yes.
Now, in terms of actually assisting clients in securing 45Q credits, is that anything you've ever done?
So we've had a number of discussions about that with clients, and I don't think we've ever been involved in the actual, I don't know what to call it, accounting or tax filings for that, but we've helped people look at what could be required for proof that the CO2 is going to stay where you're injecting it.
Okay, but the actual process of seeing it all the way through to secure the credits, have you done that all the way through a project for a client?
I don't think very many people have done that yet.
Okay, and so here, in terms of telling the commission about your practical experience about being unsuccessful in securing 45Q credits or successful, you can't share with the commission any personal experience with that, can you?
The reason I did that change to the variable was because if you look at the economics from the standpoint of an investor sort of kicking the tires, that's a pretty unsupported assumption to just remove 50 cents per MCF for the CO2 price. And so I wanted to see the effect of that on the economics. So I put the 50 cents back in.
Okay, and again, Mr. Macbeth, if you'll just help me by answering the question I'm asking, and then we can move on to the next one, and this will all go quicker. My question was, in terms of actually seeing a 45Q project through for a client and being successful or unsuccessful, securing those, that's nothing that you have experience with that you could tell the commission about.
Not with the actual tax credit. That's right.
And then you said it would just be something an investor would want to consider, that it would not be a certainty getting that 45Q tax credit to bring CO2 down to $1. Was basically what you were conveying there?
Sure. I think any investor would want to know how certain that was.
Wouldn't they want to also know if a commercial saltwater disposal operator is injecting hundreds of thousands of barrels of saltwater into the recovery unit?
If the injection is taking place in a zone that you're going to try to do a CO2 flood in, that's right.
Okay, so that the commissioners, as they make their decisions in this case and talking about what an investor would want to know about before starting a tertiary project here in the San Andres, you with me so far on what we're talking about?
Yes.
You can tell them that an investor would absolutely be aware of and concerned about saltwater injection into the EOR tertiary flood area. Yes.
Yes, as long as we're on the same page, as long as that hypothetical CO2 flood is in the zone where the saltwater is being disposed of.
And you've heard Empire's testimony that their intention is to flood the entire San Andres, lower and upper, right?
I've heard two versions of that testimony. One at a deposition in December where Mr. West said the model was the top 400 feet of the San Andres, which we relied upon to do our work. And then I heard that changed to include the whole San Andres.
Now, and again, in terms of investors, you understand that Empire here is publicly traded. And there's been discussion about whether they would need to raise money or not to pursue the project, correct?
Well, I know they're publicly traded.
And again, they wouldn't have, just bring this back to reality checks, they wouldn't have to bite off on $1.2 billion of CapEx to carry the project out. You would probably start it at a far smaller capital expenditure on 10 or 40 acre spacing across a section, high grading based on your work, what you think the best areas are, wouldn't you?
That's possible. As long as you could contain the CO2 on the lateral edges of that.
Okay. And so again, as we bring it back here to just giving Empire a chance, we covered, I do remember we covered this, the minerals here are owned approximately 60% by the state of New Mexico, about 20% by the BLM, and about 20% by fee, right?
I think you reminded me that those numbers came from the unitization proceeding, so I don't recall them exactly, but I'll take your word for it.
Okay. And the concept, so we've all agreed here that what would be the most likely case is you would go in on 10 or 40 acre spacing across a section or more or less in terms of proving up the concept. And I guess just in terms of that, obviously there's going to be a lot of engineering, a lot of geology, a lot of petrophysical analyses where they're going to try to pick their best spot, right?
I expected to see a lot of that prior to this hearing, but if you tell me, if I assume that there's a project going forward, I can also assume that there's a lot of work to be done.
Yeah, and I mean, isn't that, I mean, this EMSU, this field, not the EMSU, but this area has been producing since the 30s, yeah?
Maybe even before the 30s, yes.
Yeah, I couldn't remember. Was it late 20s, early 30s?
I think early 20s, some of the discovery wells.
And I mean, isn't that one of the prerogatives of an oil and gas operator when they own that oil and gas lease is to develop and plan their developments, at the pleasure of their own timing, as long as the lease is being held?
Ooh, there might be some royalty owners that would disagree with you on that.
You're not aware of any failure to develop lawsuits out here, are you?
No, I'm not.
Okay. But again, coming back here in terms of the tertiary recovery, it's not a fair criticism of Empire that they don't have all of the models built to your satisfaction from an economic case, because this has all been rushed as a result of this injection of this saltwater disposal. Empire has not been allowed.
Objection to testifying by Mr. Waymeyer.
It is a bit of a narrative, Mr. Waymeyer. Maybe you can break it up.
Yes. Part of your fuss, and you talk about this in your filed papers with the commission, is that you would expect more data, right? From Empire.
More analysis, I would say.
And with respect to more analysis, again, you understand that there is an urgency here to Empire bringing this to the commission as a result of these vast volumes of saltwater disposal being injected into the San Andres, correct?
I mean, you're telling me that Empire has urgency? I don't know. That's not an engineering term. I'm not sure how I incorporate that into my work.
Okay. But I mean, in terms of the relative volumes, I don't want to show the graph again, but you've seen that stacked graph with the orange on top and the blue on the bottom. I mean, these volumes of that Goodnight is bringing into the MSU are in scales vastly more than what has ever happened historically here, right?
Well, I mean, there's been a longer time historically, so you'd have to add up all the disposal in the past and compare it with what has happened in a relatively short time. I haven't done that.
Now, coming back to the $1.50, just as we talk about the expense side, the $1.50 versus $1, you said, well, an investor might not be willing to take the uncertainty of this being dollar CO2 with the 45Q credits, and they might want to model in $1.50, right?
Or more. I mean, I even think the $1.50 base number is kind of low.
Have you brought any studies or anything in your written filed statements that explain how the $1.50 is low?
No, I haven't. There's very little public data on CO2 prices, so you can hear stuff on the street, but that's about it.
Okay, so as we talk about CO2 prices at $1.50, you just said there's very little data on it, what you hear on the street. As we talk about uncertainties in your assumptions in your model, you can give me that the $1.50 is also an uncertainty in your model, yes?
Well, in mine and in Empire's, that's right.
And Empire could look at this from the economic perspective of we're confident we're going to get the 45Q credit and a dollar is good for us to proceed, right?
Yeah, they can do whatever they want, I guess.
And again, this comes back to, shouldn't they at least be given the chance, given that they've owned these leases, that they own these leases and this unit has been established for decades?
So I think that's a question that the commission will struggle with, but my analysis was to look at the information available to try to see. And the reason I only messed with, three components or three variables in the economics is I looked at those three obvious ones and it drove the economics south. If I had sharpened my pencil and did more work on the recovery, which I think is too strong at 18.5%, it would have gotten even farther sort of negative. So my understanding is, and I'm not a lawyer, but we're talking about whether there's really waste here or not. And my understanding is that for something to really be waste, it has to be economically viable. And that was the purpose of my looking at those economic calculations.
And as we talk about economic viability in this variable of the cost of CO2, you've already given me that according to you, that's uncertain, not a lot of public data. What you're working off of is quote word on the street, right?
No, what I said was, I think that the $1.50 is low. And I think if we were to investigate that, either get information from suppliers, it would be higher than that, which would drive the economics down.
If Empire is successful getting the 45Q credits to bring CO2 down to $1, you with me so far on the assumption?
Yes.
You have not offered the commission any opinions under the hypothetical that they're successful with the 45Q credit that the dollar is wrong, have you?
I have not. No.
Okay. So again, if Empire is willing to accept the case that it will get those 45Q credits, and bring it down to $1, I mean, I guess really what we're fussing over at this point then is just whether they can get the 45Q credits, because if they get them, you with me so far on the hypothetical?
If they get the credits?
Yes.
Yes, I'm with you.
You would not have a different CO2 price to share with the commission besides the buck that is in the Empire model and that they've already testified to. Isn't that right?
Well, assuming I wasn't allowed to revise my calculations, I guess you're right.
Okay. Now I want to move on, and I'm sorry, I jumped over the $150 where I wanted to tie the loop around this. As you talk about a initial development of a section or more than a section, or maybe a little less than the section, if we're focused on that, obviously there's going to be a lot of science and a lot of engineering that would go into picking what section that happens on, right?
Okay, you said I talked about development of a section?
No, sir, I'm sorry. I missed on the question. Earlier, we were talking about just the development, that you wouldn't do this across 14,000 acres or 10,000 acres on the first day. You don't go out with $1.2 billion on day one. You're going to start on a smaller scale, right?
It's possible you would implement areas of the field sequentially. That's true.
And as you work sequentially, I'm just trying to give the commissioners a rough sense on geography. Are we talking here 640 acres? Would that be reasonable to you? Bigger, smaller?
I can't really answer that as I sit here. Not sure.
Is that just because you don't have experience with actual EOR tertiary projects in terms of, the startup of the project?
No, it really turns on. So if you're in a field where you have many acres, like, like we have here, there is some downside to doing pilot projects because you have boundary effects where you're going to lose recovery. As long as you have injectors surrounding producers, you're probably going to be able to capture CO2 on the interior. And this is a hypothetical about some generic CO2 flood, but on the boundaries, you kind of lose out. So there'd have to be some kind of analysis of where to do that, where to start, if you could do that. And I'll note that even the economic spreadsheet that was provided, it goes pattern by pattern and moves each pattern out in time by some amount. So it is kind of staged already in the economics.
Yes, sir. And so what I'm coming back to, though, is in selecting that location where you start, aren't you going to want to pick the location that, based on your science and engineering, you think is your best spot for all the reasons you just spoke to?
Could be, yes. That's likely. Let me say likely.
And just the way the San Andres works out here, there are going to be sections of land that have higher oil in place in them than other sections in land, aren't there?
Which San Andres are we talking about?
All of it.
I suspect there'll be variations even under Mr. Davidson's analysis, Dr. Davidson's analysis.
Okay. And so I would call that high grading. I don't know if we talk about the best spots based on the petrophysical work of Empire, can we be on the same page that I'm talking about high graded spots?
Yeah, I don't have a problem with that term.
Okay. So as we talk about high grading, now with respect to your economic case did a blanket assessment across the entire EMSU, correct?
Objection, mischaracterizing Mr. Macbeth's testimony. Mr. Macbeth's testimony was that he applied Empire's economic model that they plan to implement.
Well, and he can say that.
Do you want me to answer?
Yes, sir. Overruled.
Okay. So actually the 72 pattern model does not cover all of the MSU. And it's not my model, it's Empire's with adjustments.
That's because you didn't build your own model here as part of Goodnight's application for the saltwater disposal wells, right?
That's true.
Okay. And you understand part of this proceeding are these new applications from Goodnight for even more saltwater disposal wells inside the EMSU. You understand that?
I do.
If the commissioners wanted to know as part of that application where they would go to find a ground up economic analysis built by a petroleum engineer, you're not aware of any such analysis. True?
And what kind of economic analysis are you asking about?
To assess whether there's waste, an actual model built from the ground up by an engineer that's going to come in for Goodnight as part of its applications for SWDs and say, this is our model. This is what we think is reasonable. Have you done that or have you seen one?
I think my adjustments to Empire's model fulfill what you've just asked. They show that their assumptions are not economic.
Okay, well, we're going to dig more into that, but again, really, the variable there is chiefly price, volume, and the cost of CO2, commodity price, and volume of hydrocarbon, right?
Well, did you say oil price?
Yes, commodity price.
Oh, commodity price. Those are the variables I changed. Yes.
And we've already talked at length about the $1.50, and I'm done talking on that. But now I'm just getting to this high grading. And so if the commission wants to know take your 72 pattern, are there places in the 72 pattern that has more oil in place than others, or is it uniform across?
In that model, every pattern is identical in recovery.
So, but you can tell the commissioners that that's not how the oil under the EMSU actually works. There are going to be high graded areas where there are sections that have more oil in place than others. Isn't there?
Well, because I averaged all of the logs I was given by Dr. Davidson, every calculation he made in the upper 400 feet of the San Andreas, that does aerially capture the average saturation for all the penetrations we have at this point. So I would say that it does cover the average.
I think we're missing. If the commissioners want to go to one particular place, for example, right where there's an SWD well, you with me right there?
The commissioners want to go to the SWD well?
If they want to put their finger on the SWD well and say, how much oil in place is under this particular section, as opposed to a section on the other side of the EMSU, the way your volumes are built, you can't do that, can you?
The way it's built is based on an average. I think one of the wells that Dr. Davidson analyzed was an SWD well. So you could look at that well.
My point is because this average that you've used is section by section across the EMSU or a little bit smaller than EMSU on your 72 pattern, right?
I didn't follow that. I'm sorry.
Yeah. The point is the oil in place is not going to be the same as you move section to section, is it? On what's actually under the ground right now.
It will probably not be exactly the same. That's right.
And so, and again, with respect to the model that y'all built by way of volumes, if there's a high graded area based on Empire's science or engineering or both, obviously there's going to be sections that have higher oil in place in them than the average, aren't there?
Yeah, I agree with that. That's how averages work.
Which, as we talk about the volumes that are in your analysis, you would agree that there are certainly going to be sections where Empire could go carry out its tertiary project. And even under your analysis, the oil in place under that particular section would be higher than the average use in your economics. True?
If you say patterns, I will agree with you instead of sections.
Perfect. I'll take that. And how many acres does the 72 pattern cover?
It's about 10,000, I think. It's 72 times 40.
Now moving over to price, and we covered price. last time a little bit. And I think that's where we ended for the weekend. All right. Just in terms of, you know, giving the commissioners a sense of the forest for the trees, as we talk about forest, we've now talked about the expense case on CO2. We've talked about the volume case that you got from Dr. Davidson and how that fits in. This is from your deposition, and you were asked, economics can change also over time, right? And your answer was the biggest driver of economics for CO2 floods is the price of oil. Do you remember testifying to that?
Yes,
Do you stand by that testimony today?
I don't have context here about what we were talking about, but it's that plus the price of CO2. Those are the two biggest things.
Okay. And with respect to economics, you built you had two models. You didn't like Empire's pricing, and Empire started their pricing at 75 and then escalated it to the out years at 1% annually, correct?
Yes,
You held a flat $75 deck, and at a $75 deck, again, you understand we are not here reporting these to the SEC as part of reserves that Empire is reporting. You understand that this is completely different than an SEC PDP or PUD analysis, right?
absolutely.
Okay. And because we're not dealing in SEC, you also know that we're not asking a bank for money as part of this. We're not using our oil and gas lease as collateral. And so we don't have to have Netherland Sewell satisfy JP Morgan. You understand that's not this environment either, right?
I really have no information on that.
Okay. Different oil and gas operators, you know, have internal price decks that they use, don't they?
That's true.
And that's going to vary from operator to operator, isn't it?
It can, and it can be based on hedging and a lot of different things.
But again, in terms of the internal price deck, so I'm setting aside bank lending, I'm setting aside SEC reserve reporting for PDP or PUD, and I'm just talking about the internal economic analyses. You know that operator to operator, they will have their own internal commodity deck where they forecast in the future that helps guides their internal investment decisions, don't they?
They do as one of the runs they usually do. Yes.
And obviously those will vary those internal decks will vary wildly between operator to operator, won't they?
Not wildly. No, I don't think so.
In terms of just giving the commissioners the sense of how far out these out years are, where does end of economic life on the project terminate under your model?
Which version do you mean?
I guess I mean, in terms of Empire's model that you began with, you know that model runs through over 40 something years and out years, doesn't it?
Yes.
Which would be consistent with how EOR tertiary projects are carried out. This is not, you go in and you frack the Wolf Camp and the Sprayberry and you wine rack it and you're getting 80% of your production out in the first 3 years and you've moved on to something else. That is not how this kind of a project works.
They are usually long-lived. That's correct.
So as we talk about long-lived, we showed this slide last time. This was just saying, I know you don't want to look at historical, but if you're looking back historically to 86 or wherever you want to cut it, there's been a 2.77% escalation over that period of time, right?
According to this, you could also draw that line from the peak down to and it'd be a negative number.
Just arbitrarily start in 2009.
Well, you certainly have oil prices before 86, so there's some arbitrariness in the way you've drawn it as well.
Pre-86, were those good years for oil prices or were they lower if we go that way?
No, I graduated in 87, so those were bad prices.
Okay. I'm not, I mean, you could have drawn your own line if you wanted to. I didn't want.
My real concern about this is looking backwards and trying to say that suggest what's going to happen with future prices?
Additionally, I mentioned EIA data last time. You know, they have long-term outlook price decks, don't they?
Yes.
Have you done any analysis in terms of what EIA's long-term forecast looks like?
No, I have not. I don't use the EIA price deck.
You know, EIA price deck is going to be far more aggressive than what you used in your model, don't you?
Well, it's going to be more than flat, probably. Yes.
And these were some of the publications that have been admitted in evidence in the case of this point. Do you remember looking at the 4-county appraisal of the San Andreas Fairway of the Permian Basin paper?
I'm not sure that I did.
Okay, and again, these have come in evidence already, but here they had oil price of 75 a barrel, escalating at 2.3% per year. The oil price selected for the analysis is consistent with the midterm outlook for oil prices in the Energy Information Administration's 2018 annual energy outlook. At least this is, the author has noted that EIA has a 2.3% escalation on its midterm outlook, and that escalation is 2.3%, right?
That's what he says here. I haven't double checked this.
Conservative to the 2.77 that was shown on the earlier graph, and in literally a multiple of double of what Empire's built its economic case on. True?
Are you saying 2% is double 1%? Yes.
Yes. All right. This is another one. This was a 1987 Cobb and Associates paper that came out in evidence in the case already. And here they were using an $18 a barrel deck, escalated to 20, price held constant until January 91, escalated to $22 a barrel, held constant to 92, and then escalated at 5% per year. You see that?
Yeah, I was driving when this was presented. I thought I heard some discussion of a flat price too, but if this is the Cobb stuff, I see that they escalated in part of their analysis too.
And that this escalation would be multiples more aggressive than what Empire has used here in its model. True?
That's true.
And what they did there in 87, as they're predicting the future in 1987, they held it flat at $45 once they got to the year 2006. Do you see that?
Yeah, I do.
And so even at all of those escalations, which reached 5% per year, that would have been quite conservative to what was achieved in 2006 and the average of commodity prices since 2006, wouldn't it?
I'm sorry. What compared to what?
Compared to what actually happened. So if we go back to 1987 and say, was Cobb and Associates, were these guys just crazy when they predicted this escalation through 2006? They were actually conservative to what has borne out by way of experienced history, weren't they?
Yeah, but they only escalated for a few years compared to, the number of years that Empire did.
Well, let's put this in terms of relativeness so that the commissioners aren't misled. They started at 18 a barrel, right?
Yes.
And in not that distant out years of 2006, they get to 45, right?
But apparently they do, yeah, in 2006.
So about a multiple of about 2.5. I'm eyeballing that. You're the math guy.
Yeah.
Okay,
Yeah.
a little over 2. Empire's case starts at 75, right?
Yes.
And what is the highest price that ever works its way into the Empire model at the 40 plus out years?
I think it's 118.
Which would be not even nearly double. That would be conservative to what 1980 the Cobb and Associates predicted in 87 and what was experienced in actual reality. True?
With that sort of tortured comparison, yes.
Now, I just want to put the a little bit of the sensitivities here into into focus for the commissioners. We've done some different sensitivity analysis to just show them how the numbers change. And again, all the numbers that have been presented here by Empire have been in net present value, right? Those are discounted dollars.
Actually, the model has both cash and present value numbers. So as far as presented, I'm not sure.
But if we put our hat on for the mineral owner being the state of New Mexico, they don't have to look at this in terms of net present value. This would be a royalty stream that would be established for the state of New Mexico and BLM that would continue for 40 plus years with royalty dollars received in real time over the next 4+ decades, wouldn't it?
I'm confused by why you say they don't have to look at present values.
The royalty owners the state of New Mexico here would be receiving royalties on Empire's EOR and tertiary development of the San Andres for 40 plus more years, wouldn't they?
Under these hypotheticals, that's true, but I think you're confusing two concepts. If you wanted to say how much it's worth today to any royalty owner, you'd still have to do it on a present value basis.
Right. But the state of New Mexico isn't looking to sell these minerals to anybody. It doesn't need a net present value today in terms of selling these, right?
Oh, I don't think they sell royalties.
Now, looking at the economic sensitivities, here on a base case, do you see we've got 300% thickness? We're looking at oil in place, the oil in price per barrel, and the CO2 price. With respect to varying those, even if we use your volumes, are you with me so far on using your volumes?
So can you help me with what you guys did to make these adjustments to the model?
I'm sorry, this is actually Exxon's ROZ case. I just got a note, I grabbed the wrong slide. This was Exxon's ROZ case. I'm going to skip that one and go to the next one. There we go. I've got more slides than you can imagine. So on the economic sensitivity, if you start with base case on a 100% CO2 injection versus a WAG, if you go at 49 million barrels in place per 640 section at $75 and a 1% escalator with $CO2, you see that's a net present value of 585 million.
I mean, I see the number, but I have no idea how you did this. And if you were using that same economic model, it says 100%. I'm assuming there's WAG and not WAG, but that model isn't set up for that.
If you can even use a flat price deck for Empire's volumes and at $1 CO2, it's still profitable, isn't it?
I don't know without looking at the model.
I
mean, this has a positive number.
In terms of all of your work here, you really didn't run these models for checks to see, let's say Empire's right on its CO2 price, but I hold their deck flat at 75. Are they still profitable? I mean, you did these calculations to see where these analyses land under the different variables that we're fussing over, haven't you?
I lumped them all together for the calculations I did.
You didn't run them to see if I'm right on oil price but wrong on CO2, this is where it lands, or if I'm wrong on CO2, or if I'm wrong on price but correct on CO2, this is where it lands?
No, I was trying to look at the variables I thought were least supported with a price deck that goes up to about $120, the flat price. And, you know, we ran these things about the time we did the rebuttal reports in early January. Prices have fallen since then. So I think the flat 75 is kind of strong today.
But You're saying everything should be rerun because of the tariff situation that on April 23rd, we have 64-ish WTI or whatever it was this morning?
No, I'm saying if you want to get a sense for the economics of a project, you better keep up with what the market is saying the price of oil is.
In terms of other sensitivities here, I might be able to shortcut a lot of this. You can tell surely you ran this one to be able to confirm. You can take Dr. Davidson's volumes, your volumes that you use. You with me so far?
Which line are you looking at?
I'm actually off of this. I'm just going to ask if you did it.
Okay.
If we assume your volumes, you with me so far?
So my porosity and my oil saturation?
Yeah, let's just assume that Dr. Davidson is right and that all of Exxon and New Tech and Ops Geologic are completely wrong. You with me so far?
Yes.
So all of New Tech, all of Ops Geologic, all of Exxon, you guys just boofed it, but Dr. Davidson did it right with his species model. If you use the dollar CO2 price that we've already talked about, and if you use the 1% escalation off of 75 WTI, you with me on those two assumptions?
I think so. I think you're on the second row of this exhibit.
You can tell the commissioners that it is a positive net present value case here, isn't it?
Looks like it shows $8.5 million for investing hundreds of millions of dollars.
We don't have to invest hundreds of millions of dollars. Again, this is taking your volumes. As we talk about why on earth wouldn't Empire get an opportunity to develop its and the state of New Mexico's minerals using your volumes? If a 1% escalation off of $75 WTI is applied and a dollar CO2 price, you can tell the commissioners that that is a positive net present value case, isn't it?
That one looks like it calculates out slightly positive.
And you can tell the commissioners that as pressure increases, that decreases the economic feasibility of the project. Isn't that right?
That's a complicated question that has to do with miscibility.
You're not willing to agree to the simple fact for the commissioners that as pressure in the San Andres builds, it will impair and impede the economic project that Empire intends to carry out here in the San Andres?
Well, I'm going to state this again. It's complicated because you want to ensure that you have miscibility. So I think what you're alluding to is if you have really high pressure, then you have to use more CO2 for each hydrocarbon pore volume. But when we look at the disposal that has occurred and the relative lack of change of pressure in the San Andres disposal zone, I really don't think changes in pressure are a big concern.
Does higher pressure mean that significantly more CO2 is required for compression?
That doesn't make any sense. I think I covered this just a second ago. If you have higher downhole pressure, you need more CO2 for every pore volume.
And earlier I showed you your deposition where you said the biggest issue is WTI price. But then today you said also cost of CO2 is the other one, isn't it?
Yes.
All right. I was already firmly weighted out into your expertise in your pool to be drowned, but I'm going farther here. And so I'm acknowledging this right off the jump. We're going to talk about pressure. And I'll move through this quickly. We talked about this slide last time. In terms of this, is it publishing? And this is a slide you're familiar with?
Yes, I can see it. I'm familiar with it.
So we have from the technical committee report, the original pressure reading from the San Andres. And in terms of just bringing that down in, I'm sorry, from the Grayburg, and in terms of bringing that down into the San Andreas, do you agree that this would be a conservative gradient, pressure gradient in terms of measuring that 1527 PSI?
It doesn't say what gradient he used there, but I think he testified to a 0.38 gradient. It's more conservative than using a water gradient, I'll give you that.
Do you dispute that with the RFT tool in the 211 well, a pressure of 1245 PSI was measured in the San Andreas?
I don't dispute that it was measured at 4006. There is a dispute about whether or not that's in the San Andreas or not.
Explain what that depletion, how does that depletion occur?
That would be from production above, I believe, or lateral zones in other wells that penetrated that same zone nearby or within a few well locations.
And fresh water, is that a gradient of 0.433?
Yes,
And that would be worked down from the original point at subsea 250, right?
you mean for this adjustment?
Yes.
I assume that's what he did, yes.
And so your explanation in terms of that depletion would be that depletion is explained by the production from the Grayburg above, correct?
Well, I've got a couple of comments about it. First of all, we don't have an original measurement in 1921 or 1936 or whatever the beginning of time is for this area in the San Andreas. The earliest measurement we have is in the Rice H20 well, and it measures out to a gradient of about 0.38. It was 1800 PSI at 5,000 feet. So when you're comparing those two numbers, you have to understand that there's uncertainty in the first number.
Have you looked at Dr. Buckwalter? He didn't know that the Rice well that you're mentioning that we were going to get that pressure reading out, did he, when he prepared his model?
Probably not.
Do you realize that Rice well matches perfectly within 12 PSI of Dr. Buckwalter's model? Have you tried to take that pressure reading and compare it against what's in his model?
He didn't give us the information to do that. He only gave us particular time steps. And so 1959 was not one of them. So we weren't able to do that.
So with the depth layer 10 in his model, this is 4,921 feet. We're working off of the 1959 pressure calculation from the EME 20. In 1938, the pressure at 4,921 feet in the model is 2,058 PSI. In 1959, the pressure in the model at 4,921 feet is 1,754 PSI. In 1959, the corrected model pressure to 5,000 feet, that's a function of that 1,754 PSI plus 5,000 minus 4,921, because we've got to make the depth adjustment, times 0.43. That would come out to 1,788 PSI. And in 1959, you know that measured pressure at 5,000 feet was 1,800 PSI, right? We agree on that. Yes.
That one I can agree on, that in 1959, it was measured at 1,800 PSI.
Which would only be a pressure variance of 12 PSI out of Dr. Buckwalter's model when he had no idea that Goodnight or Rice or some combination of them was going to pull out this Rice pressure reading from the EME number 20. It's
But that assumes that he's correct about the beginning pressure, and every other pressure he delivered to us or charted was not over 2,000 PSI. The San Andreas pressure was identified at 1,527.
Can we agree that this variance of 12 PSI, I mean, that is as close to being dead on the money as you possibly could be?
I mean, 1788 is close to 1800, but we were not given the data or information to dig into this.
But now you've said you weren't given the data. You acknowledge you were provided all of the input and export files, weren't you?
That's not true.
What import files did you not receive?
I'm focusing on the export files.
What export files did you not receive?
We only received an initialization file. We received time steps at 1986, where we could look at the grids and figure out the pressures at 1986. But he did not give us like annual time steps where we could go in and figure out at different parts of the grid what the pressures were.
And this is way past my technical ability here. Did you ask for whatever you're claiming now that you lack? Did you ask for it? And if so,
I
when
don't
and
know
how?
it. At this point, I don't know if it was asked for or if there's an obligation to provide it. I'm not sure.
All right, going back to Dr. Buckwalter's model. Do you remember a version of this was shown during Mr. West's testimony? So
I thought you showed that to me. A week and a half ago.
I
Or
don't
maybe
remember.
not. Maybe not.
I certainly needed to show it to you. I think the one that was shown during Mr. West. So
Was
basically,
incorrect.
you understand these comprise 2-acre blocks. There's 34,500 grids that would have come out of the model. Do you generally understand that's what we're looking at here?
Yes.
And what happened was, again, with the confusion, when the zeros were turned into dots to make this more readable, the program moved the decimal over by 2. This one is corrected for the program moving the decimal over by 2 on the vertical permeability. Do you see that?
Well, that's reassuring because I think I testified in my direct that I was prepared to say the range was 0.01 to 12.8.
Okay, so these would be in the range of vertical permeability, wouldn't they be?
Well, but this is in the entire, this is the connection between layer 8 and 7.
Okay, and just moving
just-
the I'm sorry, go ahead.
Not just at a single well, but over the entire 2-acre block.
And you understand it was not a uniform change in vertical permeability across 34,500 blocks. It was only 99 grid blocks that were changed by these intervals of permeability.
I understand that, yes.
And then if we go up in terms of the vertical permeability distribution, there were only 99 grids changed. And again, just moving the decimal over 2 places to get the correct millidarcy here. Those adjustments ranged from 0.05 millidarcy to 12.5 millidarcy. You see that?
I see it. The numbers we pulled out were 0.01 to 12.8.
Millidarcy,
Yes,
which would be very close here to what we have.
very close. Yes.
Now, going back to Dr. Buckwalter's model, as we talk about vertical permeability, coming back to core, we have actual core measurements here to just put into perspective the vertical permeability that's been measured in core. Is that the far right column is what we're looking at for vertical permeability out of the 649 core?
The far right in the black box.
Yes. You can tell the commissioners that some of these vertical permeabilities measured in the EMSU 649 core are very high. We've got 181, 162, 196.
These seem pretty shallow to be attributable to the St. Andrews.
and we're going to work our way down. But again, in the left column, can you explain the left column, what K max?
The maximum measured permeability in the core without regard to direction.
Very high permeabilities there, yes?
Yes, more than likely they're horizontal.
Yeah, and then we'll move down. Yeah. Other permeabilities measured in the EMSU 650.
Can you make it
tell,
just a little bit bigger?
I'm going to try.
Okay, thank you.
Is that any better?
Yes.
Very large permeabilities in the 650 core as well, yes?
I messed myself up because now I can't see the
I'm sorry.
label.
Oh,
Yeah, if you tell me it's the 650, then the answer is yes.
yeah, there we go. It's the 650.
Okay.
The EMSU 653 core, again, vertical permeability, we've got 914, 1422. There's some very large vertical permeability numbers observed in there, aren't there?
According to this summary, that's true.
All right. As we talk about going back to, and I'm close to wrapping up here, but on Dr. Buckwalter's model, again, Goodnight here is injecting vast sums of salt water and is proposing to inject even more salt water. You understand that's what this proceeding is over?
Of the additional wells, yes.
In terms of a material balance simulation, is that anything you have ever prepared before as an expert?
Well, I've done material balance for sure. I guess you're saying kind of a rough, using a simulator as a rough way to do material balance?
Yes.
Yes, I've done that.
How recently?
Oh, it's probably been 6 or 7 years.
Okay. There are certainly simulation modeling experts that are available to be hired out there, such as Dr. Buckwalter. Yes.
That's true.
Do you know if Dr. Buckwalter has a good reputation in the industry for that work?
As far as I know, he does. Yes.
Would you hold yourself out as a simulation modeling expert?
Well, it seems like from listening to his testimony, that's kind of the vast majority of what he does. It's not the vast majority of what I do anymore. I've done that in the past. And so it's part of my practice, but not to the extent it is with Dr. Buckwalter.
Okay. And here, do I understand the direct testimony you gave here that basically you would have had him model the southeast quadrant of New Mexico and like half of the Texas Panhandle or somewhere around that? How big of a model, according to you, should Dr. Buckwalter have built, geographically speaking?
So the size, and you're going back to the where I had highlighted the migration pathways and in relationship to some of the testimony from Steve Meltzer. And it's not that we want that modeled, but that's the size of the San Andres zone, as evidenced by the ability to dispose into it on a vacuum for long periods of time, as evidenced by the water supply wells to produce without any change in their productive characteristics for decades. And so it's not that we want him to build a model the size of Texas, but where he bolted on a San Andres aquifer that was 38 miles by 17 miles, it needs to be orders of magnitude bigger than that, so that when you inject into it or pull out of it, you honor the data we have that shows that the pressure response is much more muted than what his is.
Who is the witness that built Goodnight's simulation model?
As far as I know, we do not have a competing model.
So you remember the last time we visited here, it's easy to tear things down, rip them apart, critique, fuss, criticize. It's harder to build something. And if the commissioners would like to know, as part of Goodnight's application here, to inject into a designated oil recovery unit, where the model is after the passage of time and all of the expert work, there's no witness going to do that.
We didn't build an independent model.
I would love 5 minutes to visit with my client just to make sure that if they have questions that I've gotten them out, but I think I'm real close to being wrapped up here. If now would please the commission for the afternoon break, that would be certainly welcome here, but if not, I can make do.
All right, let's take our afternoon break. Let's be back by 2:55.
Thank you for that courtesy.
Ms. Apodaca, are we ready in the back?
Yes, we are.
Madam Court Reporter? Are you back, Madam Court Reporter?
Yes, sir, we're on the record.
All right, great. Okay, Mr. Waymeyer, I hope we're close to the magic phrase.
We're very close, but we're within 10 of it. Just can't say it yet. I've got a couple notes from my folks and I'll go through those quickly.
All right.
Mr. Macbeth, you can hear me?
I can.
Perfect. The, earlier, as we were talking about the effect of pressuring up the San Andreas, you gave me that it would require the use of more CO2 by Empire, right?
If the San Andreas pressured up, it would require more CO2.
Additionally, it would require more cost to actually compress it down hole, wouldn't it?
You mean to compress it so that you could push it downhole?
Yes. Okay. Now earlier we talked about that rice well and the bottom hole pressure report that came in late. And we talked about Buck Walter's model and how it fit into that. Now I want to talk about how it fits into that 211 measurement from the RFT tool. Is it publishing? Can you see the bottom hole pressure survey report?
Yes, I can.
And do you see that it has, it's calculated the gradient here, overall gradient of about 0.36 PSI. And for seawater, we know that would be about 0.44 PSI per foot.
You don't really have to do that because the different stations of that bottom hole pressure survey tell you the fluid that's in the wellbore.
Okay. How deep was this rice bottom hole pressure taken?
The deepest measurement is 5,000 feet.
That's very, very deep here, yes?
Yes.
In relation to the depths we're talking on. In here, I'm just publishing, the arrow, does that correspond with where you understood that pressure reading was taken from?
If that's 5,000 feet, that's right. I can't really see it.
You know, it certainly was down into the lower San Andreas, correct?
Yes, yes, for sure.
Perfect. Now we're just going to go through the exercise of working the math the other way and work it up to. If you have that EME depth in, and we know that the top of the San Andreas, if you do 1,800 PSI minus 5,000 feet minus 3,896 feet times 0.442 PSI per foot for a pressure gradient, as we work up to get it up here to where the 211 RFT tool was taken, that would be a PSI of 1,312 PSI at that depth, wouldn't it?
You're doing it at the top of the San Andreas?
To get it up to the 211 RFT measurement in the San Andreas, yes. I'm working the pressure the other way. Earlier, we talked through it and worked it down from the Grayburg into the San Andreas. Now we're working it from the 5,000 feet it was taken up to the depth interval where the 211 was measured. To get it here.
The 211's measurement was at 4,006. The deepest measurement.
Okay, so the 1,312 PSI calculated here, you're saying is off?
I'm trying to understand what you're doing and trying to understand where the 3896 is coming from. If you're trying to compare it to this RFT.
Yeah. And again, this has been correlated for the different points on the structure. If the math works from the other way, if the commissioners want to do the math on this and work that back up on that pressure gradient to get it to the same place on structure, if that works to 1312 PSI, the RFT measurement in the 211 at 1245, that would also indicate a depletion. If you work it from the other direction, as opposed to surface down, work it from down to up.
Well, let's think about that. So the measurement in the H20 was made in 1959. So
Correct.
under your method, you would be disagreeing with Dr. Buckwalter and you'd say that the depletion had occurred by 1959. So the time aspect of these pressure measurements has to be considered as well.
Have you given any consideration to the rice measurement? Have you done any work on the pressures off of the rice measurement?
Yes, I've compared it to two other groups of pressures, and I call them the undisturbed pressures. So we've got the rice well that it's noted on the survey, and we know that that was only like 4 days after the log was run, that it was before injection, so it's a pristine measurement. We've got that in 1959. We've got a group of water supply wells in 1986 and 87 that had fluid levels. And then we have current pressures from a well that Goodnight operates, but it's been inactive for, in one case, 1 month, and in another case, 2 months. So you have a nice static level, and all of those pressures are within about 30 PSI of each other over that time period from 1959 to 2024. They all calculate out to about 0.37 or 38. I guess the 1959 is 0.36. And so there's the best measurements we have in the San Andres show that there's been very little change in the pressure.
In terms of actually performing the calculations to bring it up to the location of this RFT measurement in the San Andres out of the 211 well, have you actually created any work product on that?
To adjust the rice well?
Yes.
No, because it's, many, many years apart.
With respect, if Empire's calculation brings it to 1312 PSI there, and there's a difference of whatever that is, about 70 PSI, that indicates depletion. Are you with me on the assumption?
Yeah, but it's confusing. I think I'm with you.
I give you that for sure. Again, the depletion, as I asked about the depletion reflected here on the slide in the bottom right, you explained that depletion as being attributable to drawdowns in the Grayberg above, correct?
Or lateral, because you're only 7 feet, even under your top analysis, you're only 7 feet into the San Andres. And there have been workovers, deepenings, completions of wells using nitroglycerin. So the chances that there's some lateral movement of fluids that could explain that, that's what I think happened.
Okay, but when we visited before the break and I asked, how would you explain that depletion? The only answer I heard was likely from lower pressure above in the Grayberg. Wasn't that the testimony before the break?
If I said that, I misspoke. I meant lateral aerial drainage around that.
I'll pass the witness.
Thank you. OCD.
Thank you, Mr. Hearing Officer. Pardon me, the allergies are not much fun today. Good afternoon, Dr. Macbeth. Thank you for coming back today. We know we had
Thank
to
you for
split
the
this.
honorific, but it's Mr.
Oh, sorry, Mr. Macbeth. This hearing has gone on a while and I'm starting to get a little sloppy on that. This should be fairly brief. So do you recall back on April 11th of 2025, you were under oath? You recall that?
Yes, I do.
And you were being cross-examined by counsel for Empire. You recall that?
I certainly do.
And do you recall during that examination, Mr. Waymeyer informed the OCC that you two were friends? Do you recall that?
I do.
Okay, thank you. I'll pass the witness.
All right, Mr. Beck, for Rice Operating and Permian Line Service.
Mr. Macbeth, you discussed with Mr. Waymeyer about a bit about the 45Q tax credits. Remember that?
Yes, I do.
And how much is Empire getting its CO2 for under those 45Q tax credits?
If you assume that their starting price is correct and the reduction attributable to a tax credit is correct, it would become the net price is $1 an MCF.
And I'm not asking for any assumptions. I'm saying today, what are they getting their CO2 for?
Oh, I don't think they have any contracts for CO2 as far as I'm aware.
That's what I'm aware of. And the 45Q tax credits, I'm not totally familiar with that, but I understand that to be part of the tax code. And 45Q is under the tax code. Is that right?
That's right.
And those tax credits are administered by the IRS, the Internal Revenue Service.
That's true.
And this was, the 45Q tax credits were created to push for more clean energy in the oil space. Is that true?
That's true for mainly carbon sequestration in this particular application.
And have you heard how the IRS is administering that 45Q tax credit this year under the new administration?
No, I don't have any information on that.
So you don't know whether it'll go up in use or down or use in the future.
Objection, lacks foundation. The witness has testified to lack of personal knowledge.
I think that's what I'm asking him.
Overruled.
So you don't have any information that would tell you whether those 45Q tax credit use would go up or down in the future.
That's right. I don't.
You also talked with Mr. Waymeyer. He talked with you about Empire's plan to go and exploit the oil all the way down to the bottom of the San Andres, right?
He questioned me about that, and that was an assumption that he directed me to make. Yes.
And I think he said that that they wouldn't go and just spend that 1.5 or 1.2 billion dollars wholesale. They would do it. I think he said sequentially, right?
Well, that's what's built into the economic model. The patterns are sequential. Some of the things in a CO2 flood, some of the things you have an opportunity to dribble the money out as you build patterns. Other things like building a CO2 lateral or building a recycle plant, you can't really do that in pieces. It's all or nothing.
Part of that, I think he said and you agreed with, was that they would select the best location to start, right?
That I would expect that. Yes.
And then would you expect that if in that best location to start, they weren't able to exploit the oil out of the bottom of the San Andres, they'd stop?
Yeah, that's true. If you went to the best spot and it was a failure, there's no reason to go to the spots that are worse.
And where is Empire starting this project to go to the bottom of the San Andres?
The information I have doesn't tell us that. We don't know the sequence of the patterns. They're just numbered patterns 1 through 72 in the spreadsheet.
So in the time since they acquired this property in 2021, sitting here today to 2025, you don't have any information that would tell you they even have a starting point for this project. Is that true?
If they do, they didn't share it in the discovery in this matter.
Now, Mr. Waymeyer said at the beginning of your examination last week that it would be a great benefit to the people if Empire was permitted to do this project. Remember that?
He asked me to agree with that. Yes.
Okay. And you agreed because the potential is immense, and there'd be no cost, at least as we're sitting here today, to see to the public, right?
If you assume success, yes, it would be a big benefit.
Right. And he asked you to assume that, right?
He did.
Now, he talked about that Goodnight is a Texas company, and the profits presumably would go out to Texas, right?
He asked me some questions about that, not this session, but 10 days ago.
All right. And do you know that Empire is not a New Mexico-based company?
I don't really know for sure.
Okay. Do you know that Goodnight employs people in New Mexico
I would expect so, yes.
to operate its operations here, right?
Yes,
And those people pay taxes here in New Mexico, right?
I hope so, yes.
And presumably Goodnight pays gross receipts tax here in New Mexico.
You're getting on the edges of my accounting expertise, but I think so, yes.
All right. And my understanding of Goodnight's operations is that it takes wastewater from oil and gas operations in New Mexico, right?
That is true, yes.
We'd presume that those oil and gas operations that provide wastewater pay royalties and severance taxes, true?
Absolutely.
So, as I sit here today, I think the truth is that, tell me if you agree with me, that there's nothing today preventing, at least regulatory wise from this commission, preventing Empire from going and drilling down to the bottom of the San Andres and starting its project. True?
I think that's true. They have the rights to operate there.
And did you hear the testimony that what's preventing them is an order from the company saying, don't do this until all injection in the San Andres has stopped?
Yes, I heard that testimony.
So if all disposal in the San Andres is stopped, then all operations of Goodnight are stopped, right?
I think that's correct.
At least
within the
EMS
unit, yes. Yes.
Right. And so the taxes we talked about, the Goodnight and its employees pay, those aren't being paid.
This is so far outside of anything that is in his opinions. Employee taxes would require rank speculation on number of employees, how much they're paying tax. I mean, this is so far afield of what a petroleum engineer has opinions on. And it's outside of his written testimony. I don't want to have to go back and redirect him on this, recross him on
You're
that.
not going to get the chance.
Well,
Yeah.
so I would ask that this be limited to what's in his direct testimony and what was fairly in cross, which this is not.
All right. Well, you brought up the issue. I think you opened the door. Mr. Beck, by the same token, I think we get the point. So I'm not going to sustain or not sustain the objection, but I would ask you to move on.
So those, that last question, those taxes would not be paid when Goodnight's not operating. True?
Under that scenario, that's true.
Now, so we talked about that there's nothing regulatory preventing our Empire from going down and exploiting those minerals at the bottom of the San Andres, right?
I object that mischaracterizes it. I think for an EOR project, we do have to go through a regulatory process.
Well, I think the objection was asked and answered, and I think it's been answered. So I'll sustain the objection.
So hypothetically, if Empire wanted to go and start a small test place in the best spot it picked, it could negotiate with injection operators down there to stop injecting into a portion of that space down on the San Andres.
Objection, two objections. One, rank speculation from this witness. Two, Empire's under no obligation to negotiate for just a little bit of waste or a lot of waste, but not as much waste. There is no basis on the planet that Empire would have an obligation to negotiate with these people for only some amount of waste of New Mexico's resource.
I can lay some more foundation.
Okay, Mr. Beck, but again, I think we get the point. So if you do your best not to belabor it.
Mr. Macbeth, I think we heard you provided consulting services to lots of oil and gas companies, right?
Yes, I have. And I continue to do so.
And including, for example, ExxonMobil, right?
Yes, that's true.
And have you seen in your experience when operators are in the same space, they negotiate to stop work in part of the space in exchange for concessions from the other party?
Same objection. He's getting into 408 suggestions that Empire was under some obligation to allow waste of New Mexico's minerals through a settlement. It's irrelevant. It's inappropriate.
Overruled.
Do you remember my question, Mr. Macbeth?
I do. Yes. Yes.
And have you seen-
I've been involved in a number of matters where producers and disposers work together with either shut-in agreements or other types of arrangements to provide the coexistence of operations.
We talked about, or you talked with council about who knows the most about the Grayburg, the San Andres, and you made a list. Do you remember that?
No, I don't. Can you remind me?
Sure. I have written down that you agreed with him that the list included Chevron and ExxonMobil.
Okay. Yeah, we're talking about operators. Yes.
Yep. And then he talked about the brochure from ExxonMobil that we've all seen. You remember that?
Yes.
And do you remember that the ROZ in that brochure went down to -700 subsea?
I think that's right. I can picture it. I think that's right.
And then he talked at length about getting investors to invest in this ROZ recovery project, right?
I did in the context of the economic analysis that I did.
Okay. And I think you talked about that it would be tough to do that if investors knew that there was saltwater disposal going on, right?
And I think I was careful that if it was in the same zone, yes, that could be a problem.
And when Empire purchased the EMSU, saltwater disposal was going on in the San Andres. True?
True.
I think Mr. Waymeyer asked you about your experience with ExxonMobil as a very successful oil and gas company, right?
Yes,
One of the largest corporations in the United States.
that's true also. Yes.
And if it's not the largest, it's one of the top 2 largest oil and gas operations in the United States, right? Corporations.
They're very big. I haven't double checked those numbers recently, but they're very big.
And its duty as a corporation, if you know, is to provide return to its shareholders, right?
Oh, absolutely. Yes.
And you're aware through your work on this that ExxonMobil decided to sell the EMSU, AGU, and EMSUB with this potential ROZ, right?
Yes, I'm aware of the sale that occurred.
And it decided to sell it instead of exploit it and take on that project itself, right?
That's true.
No further questions.
Thank you, Mr. Beck. Mr. Suazo for Pilot Water Solutions.
No questions for Mr. Macbeth, Mr. Hearing Officer.
Thank you, sir. All right. So we're back to the commission. This time, let me start with at the top with the chairman. Chairman Rosados, do you have questions for Mr. Macbeth?
Thank you, Mr. Hearing Officer. No, I do not. Mr. Macbeth, thank you for your time.
Mr. Lampkin?
I do have a couple questions. Good afternoon, Mr. Macbeth. Thank you for returning to finish your cross-examination. Just one clarifying question in regards to something that Mr. Beck asked. You understand that in order to implement a tertiary recovery project in the MSU or for Goodnight to spot a new disposal well on or adjacent to state lands, that they would need approval of the Commissioner of Public Lands?
Yes, I understand both of those things. Oh, the one nuance to that is I don't know what the rules are for like a pilot project or something that wasn't a full-blown EOR project.
Okay. And then my other question was regarding something that you testified about previously with regards to CO2 loss to the formation. What is a reasonable percentage of CO2 that you would expect to lose to formation in a EOR project like this?
In one like this that has dispersed shows of oil, that they're not all bunched together in one zone, they could be very significant because the CO2 is going to go into any available porosity that has permeability regardless of the oil saturation. So it would be a function of kind of the net to gross in a particular zone. Very significant when you compare it to something like tall cotton or SSAU that had relatively continuous thick intervals of ROZ where if you're putting CO2 in, you're contacting oil.
Care to venture a ballpark percentage?
I think it could be, factors of 2 or 3 times the expected amount. Really, to answer it well, I would need to look at a log and the distribution of those CO2 volumes, but it's going to be on the order of 2 or 3 times the CO2.
Thank you. That's all my questions.
Thank you.
Thank you, Mr. Lampkin. Dr. Ampoma?
Mr. Macbeth, thanks so much for your testimony.
Welcome.
And I do not have your slides, so I'm, trying to remind myself, all the testimony, but I'll try my best. Now, I reviewed your direct testimony. I did review that, so I'm just going to start with page 5 of that. And I'm reading on, so it's going to be number 6, under the potential impacts of EMSU's operations, well integrity.
Okay, yes.
Okay.
Dr. Ampoma, if it's helpful, I'm happy to put anything on the screen of Mr. Macbeth, if it's helpful.
That would be helpful.
If you direct me to what to show, I can do that.
Okay, so I'm looking at the direct testimony. There are sessions, so I'm looking at the potential impacts of EMSU's operations, well integrity. That will be page 4 of his direct testimony.
Commissioner Ampoma, just so you're aware, I've got this up, but it doesn't have every one of his exhibits because it's a very large file. So I'm happy if there's a specific exhibit, let me know and I'll pull that up. But I will share his testimony, and then if we need to go to specific exhibits, I can do that as well.
Yeah, so this will be the self-affirmed statement. So let's go to page 5. Okay. Yeah, right down the A. So I'm just going to pick a sentence in there after the API number under A. So you said you have reviewed the VDL from the NFBanks well 1, and then you're saying that indicate that the injection is contained within the perforated interval in the San Andres. Now, my question to you is, if you're saying that it is contained, do you know the boundary condition for the San Andres?
Are you talking about the tops and bottoms of the San Andres?
No, even the lateral extent, because you're saying that you've reviewed the well bore analysis, the variable density log, and then you're saying that it indicates that the injection is contained within the perforated interval in the San
Right.
Andres. So I'm asking you, do you know the lateral extent of the San
Well,
Andres?
Can I give you a little context for this paragraph and others that relate to this other wells? If that's all right.
Yeah, and even I was surprised that, as I read through your testimony, I thought that you were going to talk to the commission, taking one of the wells one after the other, telling the commission about how these wells are not impeding into, let's say, or impacting Empire's operations, but instead you more or less focus criticizing what we've already heard before without even focusing on this particular so much important point. So yeah, I'll be willing to listen to that.
Yeah, so I kind of introduced this topic just above here, and I say that I've been involved in other disputes between producers and disposal companies, and one of the first things I do is to check the man-made penetrations. So I did look at the bond logs, amplitude readings, the VDL forms for the wells that I had that available. I also looked at the water supply wells, which are a bit older, so they have kind of older versions of those logs. Where we didn't have logs, I had cement information. So I was prepared to talk about that. And I went to my deposition and was asked, well, don't you know that that's not even an issue that Empire is worried about? And so in the interest of not belaboring it, although I do believe these wellbores show integrity, and I've eliminated them as a man-made path between the San Andres and the Grayburg. It was basically a one-sided argument, so I didn't include it in my summary slide since we were already running short of time and taking up too much time with those direct summaries.
I appreciate that. Now, my question to you is, so you're saying the fluid is more or less contained within the well bore, or let's say within that zone.
Yes.
Do you know where the displaced fluid is going?
It's going out radially from the perforations into the zone.
No, I'm asking about, you do have water already in there, and then you are injecting the water to displace. So you have to displace the water that is already there before you can fill that void with, let's say, the salt water. Is that correct?
I think I don't think it'll be a perfect piston-like displacement. I think there'll be mixing, and I think there'll be some amount of the water that's already there that may not move, but there will be movement of water away from the well bores into that zone and away from the wells.
So, sir, based on your testimony and even some of the testimonies that we've had, when you test these injection wells, when you test the wells, or let's say when some of these wells were tested, some of the wells that were drilled were tested, it was producing more or less water, right?
The producing wells, yes.
Yes. So what that means is that there is a movable water available in there. So my question to you is, you are saying that, based on your analysis, the fluid that has been injected is all contained. My question is, what about the native fluid? Where is it going? Did you do analysis to know the path where it is going?
I did not. This part of my testimony was designed to look at the possible movement up and down the wellbore based on the quality of the cement job, and looking at the quality of those bond logs, I eliminated that. So the movement, when I say it's contained, it means it'll go into the perforations and then out into that zone as permitted, as the intention was in completing the well.
Thank you. Mr. Rankin, can we go to the slides that were shown, slide number 10?
Mhm.
Yeah. And I have to look at it to just remind myself. Now, so let's talk a little bit about the economic analysis that Mr. West did that you criticized. And you have a lot of experience in the business. So I'm asking you, are you familiar with the Kinder Morgan CO2 screening tool?
I am, although it was not until at this hearing that I was made aware that this model was based on their tool.
So, but you are aware of the tool. Is
Yes.
that correct? Okay.
I
And
am.
the outputs that were shown from Mr. West testimony, you couldn't attribute that to Kinder Morgan CO2 screening tool outputs.
The outputs, no, I could not without hearing that it was from them.
And don't you agree with me that in our business, that tool has been one of the most, let's say, the basic tool that most companies will normally use as a first pass analysis to analyze their potential CO2 project?
I agree with a main pay project. I don't know that I've seen that used for an ROZ.
Okay. Now, in that CO2 screen tool, do you believe that there is any distinction between how you will handle ROZ compared to main pay?
Yes, I do, because of the dimensionless curve that's implicit in that spreadsheet.
Okay. Now, we talked about the oil prices. And for folks that have a lot of experience in the CO2 EOR business, let me ask you, what is the typical price, for a successful CO2 EOR project?
It's generally much higher than primary production or current horizontal development. So, a lot of these folks get into it and then the analysis becomes sort of a point forward sunk cost analysis where you're not really considering what you've already spent because you're already in it. But for new projects, based on current prices and I really haven't run those numbers very recently, but I would guess that the starting prices would need to be in the $100 a barrel range.
So you do not necessarily have a number that has been more or less utilized in the industry as a basic price.
No, I don't think there is a rule of thumb just straight up on what the price of oil is required to put in a new ROZ project or a new main pay project.
Mr. Rankin, let's go to slide number 14. Yeah, so on this slide, you are using more or less 10% oil saturation. Now, my question to you is, why did you at least not try 20%?
Well, I wanted it to be based on rigorous analysis. I wanted it to be based on what we asked Mr. West at his deposition, where within the San Andreas would this economic calculation relate to? And the way I could do that is to take the log analysis from Dr. Davidson and average the saturations in the top 400 feet of the San Andreas,
And
along
did
with
you
the
also,
porosity.
okay, did you also average the oil saturation from the core?
Well, I didn't do that for my my statement and my rebuttal statement, but I did it last night after you quizzed Mr. Knights about the oil saturations.
Tell me about that. What was the number you got?
So if I average, did it two ways, and I got some help from some folks that were more familiar with the core, we averaged the oil saturation in the San Andreas using, first of all, using Empire's tops and also using Goodnight's tops. The Goodnight top, the average was less than this 10.39 number, so I didn't feel like I needed to rerun that. It would just be further negative. If we averaged the entire San Andreas using the Empire tops, the number, oil saturation number went to 14.86, I believe.
I want to not do that.
Okay. Okay. So if we go back to the number that Mr. Knight gave us, and if you say something different, then probably my counsel will step in and say, no. So you gave me a number that I can work with. That is 14.86, which was similar to what Mr. Knight provided. But Mr. Knight also said that he included the grayback to that number. So which one is which?
Can I correct myself? You're right. The 14.86 was from Mr. Knight's summary. When we did it with the tops from Empire, it was slightly less. It was 14.4.
Okay. I think the commission will look into that. I do appreciate that.
And do you want to hear the results of those economic runs?
No, I don't. My
Okay.
counsel doesn't want me to go there. So
Okay.
let me just hold it there. Thank you. Mhm.
You're right.
Yeah, but I was curious that at least if you could have tried 20%, which we all agree that that is the basic definition of the ROZ, and then you did a 20% and then you still got negative number, then that would be something that we could have really, really paid much attention to. Would you agree with that?
If I agree, if it showed that, that would be important. I think it would also be important to still consider how that 20% is distributed across the logs and consider that the model itself doesn't recognize that some part of the non-oil bearing zone is going to take CO2.
Let me ask you, did you review the core analysis for the EMSU 679 yourself?
No, that was not part of my work.
So you did not calculate any saturations and compare to, let's say, the any of the core data?
I did not make those comparisons. Others on the team were focused on the course.
Now, you talked about, you presented your criticisms of Dr. Backwater's model that he worked on. Based on the back and forth that we've had, even Goodnight Council showed us the permeabilities from the core. It was shown to us today. Do you still believe that his permeabilities that he used in his model is not justified?
Are you talking about Empire's council that showed the permeabilities today?
Yeah, let me repeat that. So during the redirect of Mr. Knight, we Goodnight Council showed us the permeability from the core, where they were trying to establish the impermeable zones. Were you around when we're going through that discussion?
Yes, I'm with you now. Yes.
Okay, thank you. So if you look at those permeability numbers, especially for the KV, is Dr. Backwater not justified
Well, my problem with the way that he adjusted those KVs is not so much the actual number he used. It's the fact that it was over the entire cell. So it's the whole cell, 2 acres, gets its vertical permeability changed, not just at the wellbore. And the fact that it's done sporadically, you know, sort of a heavy-handed way of adjusting. We heard from Mr. Knights that there are other explanations for that water based on the 1939 paper, and I would have expected at least some analysis that tried to look at not just a single solution for getting that water, those water numbers to match, but other solutions like a stochastic array of permeabilities that could have had a channel coming from any direction to get water into those wells. So that's the main criticism I have, not the actual numbers he used. You know, we went back and forth thinking that those were 0.01 to 12.8, and then there was an exhibit put up that said it was a Darcy. Obviously, that would have been something, but it turns out those numbers were shifted. So it's really not the number. It's just the fact that it's sporadically done throughout the reservoir to make those matches.
Yes, so I got to know that you've also run simulation models in the past. And as a modeler myself, normally we list all the potential options that we have, you know, to be able to achieve a history match based on the data that we have available, right?
Yes.
So the strategy that Dr. Backwater used, don't you believe was an option?
It's an option, but I don't think he exhausted all the options of how it could have moved. The other thing I'll say about the model, when he uses that high residual water saturation and he drops the oil water contact, you're basically starving the Grayberg for water. And then you go searching for that water and you find it in the St. Andrews.
Did you review his rated PEM curve?
I did, yes.
When you say that he starved the water, I mean, do you have the residual oil saturation or the water on top of your head that he used for his model?
I think he used 35 from memory.
And that is oil?
No. That would be the oil, the connate water.
And then you're saying that 35% connate water, which is the initial water saturation, is low?
It's
or high?
basically the irreducible water that doesn't move, and it's high. So he's freezing up that water. And based on information I've seen, it should be lower, 25, maybe even lower. That would free up water to move, which would solve some of his problem of not seeing water.
So is it your testimony to the commission that you are not aware of any reservoir that do have a connate water of about 20, let's say of about 35%?
No, any reservoir? No, I can't say that. But what I've seen in the published information that was put on at the unitization hearing, he didn't use that number. And at some point in a model, you have to decide what are the numbers you're going to believe and not change everything. So he moved those numbers around. He starved it for gas by reducing the gas oil ratio. Just a number of things that I was confused about why he chose to move those levers as opposed to changing things like, you know, that unitization hearing very clearly said they didn't have a good handle on the original oil in place, but he used that as an absolute ground truth and then forced other variables to fit that.
So, sir, don't you believe that, you know, Goodnight could have done more by at least presenting an alternative model to dispute, or at least present alternative strategy to the commission for our consideration?
Well, we did consider building our own model, but we looked at the available data. Now, Dr. Buckwalter's model has a lot of information in the Grayberg, but the real critical part of it is how the San Andreas and the Grayberg interact. And we have just very little data to match the pressures in the San Andreas. We have enough to say, I know what it is in 1959, I know what it is in 87, 86, and I know what it is today, and those haven't changed very much. But as far as matching, I think it's a stretch for him to say that he pressure matched the San Andreas because he has so few points. And one of those points is assumed at the very beginning. So we looked at all that and we said, there's not enough data to have the appearance of precision by doing an alternative model. We're gonna present the actual information.
Can we go to slide number 23? So, sir, I just want to discuss this with you. I think based on your discussion earlier or the last time, you said that there were not actual production history for each of the wells. Now, my question to you is, in our business, is it not possible to reallocate production data, back to the wells?
It is possible, as long as you honor or have some information about how that allocation is done. There's a figure in Dr. Buckwalter's original statement where he shows a field-wide oil rate. And if you look at that, the initial rate is 10,000 barrels per day. But we know that, and that goes all the way back to 1938. If you look at the history that's described in the unitization hearing, the biggest month's production, I think, was in 1940, was about just shy of 800,000 barrels per month. And that calculates out to about 25,000 barrels per day. And so he missed the initial potential on average by a factor of about 2. And I think that's really important, that most of the withdrawal would have occurred in the first 2 decades. He spread it out over a much longer period, and that's got to have an impact on the model.
So I do have on my notes that, can we go to the conclusion slide? I think probably that might be helpful. Yeah, so on number 3, you said RFT pressure measurements contradict both West and Backwater's conclusion. Now, let me ask you, based on the redirect, the cross-examination, all the information that we've listened to today, is it your testimony that the San Andreas is under pressured reservoir?
The disposal zone is the zone that Goodnight is disposing into and Rice is disposing into, and where the water supply wells were.
Even after counsel for Empire showed us Rice well with those pressures, do you still stand by that?
Can you repeat that one more time?
So I'm referring to Empire's counsel showed the pressure information at different years from one of Rice wells, that there was a discussion back and forth on that with you on that. Do you remember that one?
I do, but that was a single measurement in that Rice well.
So even with that particular information, is it still your testimony that the San Andres is under pressured reservoir?
Absolutely. The deepest pressure there is 1,800 PSI at 5,000 feet, which calculates out to 0.36 PSI per foot. And there are published studies that show that the San Andres is under pressure regionally.
So is Goodnight going to show us actual reservoir pressures, from other witnesses to more or less solidify that claim?
I think you're definitely going to see current pressures from Mr. McGuire on his wells. He has one well that has been inactive for a couple of months, and so it's a good static measurement, and it calculates at an under pressured gradient as well.
So I'm going to go to page 18 of your self-affirmed statement, your direct statement. I'm just going to look at the last statement where you've bolded that, and then we'll probably take it off from the next page. So you're saying that without undertaking critical laboratory testing or other validation of MMP correlations, that will be on 19. MMP correlations, Empire's assumption of miscibility, and therefore the estimated recovery factors are not reliable. So is that not what they're asking for the commission to give them the opportunity to do this?
I don't know that you would need to acquire data to do that. To do the slim tube test, you would, but there are correlations you could use. But my comment here related to, this is prior to us seeing their economic analysis, that we expected to see some discussion of this. There was none, and that's an important parameter in their analysis, and so it was surprising not to see it.
So will you agree with me that when I say that they should at least be given the opportunity to embark on detailed analysis to fully understand the feasibility of this project?
I mean, can you help me with what you mean by this project? If it's the entire San Andres zone, I can't agree. If it's a portion of the upper San Andres, I can agree to that.
Now, you said if it is a portion of the San Andres, you will agree to that. Now, assuming that the commission more or less aligns with your thoughts, saying that, okay, focus on the upper San Andres. Do you believe that there has been an established boundary between the upper San Andres and then the lower San Andres that will support their effective CO2 EOL in the upper San Andres?
Yes, I do believe that the data shows that there's a separation between the disposal zone and the upper San Andres, and that because of that, that if Empire wanted to do a ROZ project in the upper San Andres, that it can be done without impact from the Goodnight wells.
So when Mr. Knight testified that he used, he supposed the permeability barrier based on, let's say, 0.1 millidarcy or even lower permeability, he classified that as a barrier. Do you also agree to that?
I think so, but I didn't approach it from that standpoint. I look at the characteristics of that disposal zone and the fact that it can take water on a vacuum for decades and decades, and the water supply wells can supply, it must be very, very large. And the fact that we drill into it and have losses that you don't have above, to me, that that's saying that there's a separation between those zones. So I don't do it by looking at perms like he does, but I get to the same place.
Yeah, so assuming we are using the PAM, to delineate the barrier. I mean, a PAM of 0.1, you and I agree that CO2 will more or less pass through that. So are they not going to lose CO2 into the bottom part of, let's say, the lower San, or let's say into the lower San Andreas?
I think gravity is going to help you in that case because the CO2 is going to want to go up. So in the abstract, I agree that a gas can move through that, but I think it will more likely move up structure.
So has Mr. Beck tried to go back and forth with you on this subject that really concerns me. That is, has Goodnight done any analysis and presented to the commission the impact that, let's say, if the commission is to revoke the existing injection wells and even deny the newly proposed wells, the actual impact that is going to have on Goodnight and then also on the state?
Well, I haven't done that, and I don't think it's been done by any of the witnesses that have testified so far. But I think you're going to hear I don't know about analysis, but I think you're going to hear testimony about that.
Okay, let me try to wrap up here. Now, there was this discussion that I'm really, really interested in. So I want to ask you, based on your experience, and you've also done this economic analysis, can you comment, on the subject that when I say that when significant amount of water has been injected into the San Andreas, using that scenario, can you describe to the commission if there could be any impact on the economic value of the ROZ?
On the economic value, you say?
Yes, yes.
And for the purposes of this question, am I assuming it's in the disposal zone?
It is in the San Andreas. So both, I mean, this question is from the fact that I think there has been, I think Mr. Knight talked about, and it probably also did, that the ROZ and then the injection can all coexist, right?
Right.
So if they can coexist, I'm asking you, what is, if there is any impact on the economics, the economical value of that ROZ that is alleged to be there?
Okay, so I think there are two factors to consider. One would be whether or not the pressure would increase. And I think based on all the information we've seen, whether it's large withdrawals from water supply wells or large injections from disposal wells over time, the pressure has not changed. So from that standpoint, the change in pressure, I think, can be eliminated as a concern for the effect of the effect on the ROZ project. The second thing would be whether or not the water that's injected could move any of the oil. I think most witnesses have said no. I think there's one witness that said it would move oil off the property, which doesn't make a lot of sense. If it's a residual oil zone, that's not going to move. So I think you can eliminate that as a concern too. So my conclusion is that injection of water would not impact their ability.
What about the amount of water that the operator has to remove before they can get to their oil?
So I know that's come up a couple of times, and I don't fully understand that assumption because, and which water we're talking about, because removing water is something that happens. Are you talking about what you would do with it after you remove it, where would you dispose of it? I'm not sure the consequences or the real basis of that question.
So don't you believe that, let's say, if you are injecting water into the system, we don't know the boundary. I've asked about whether we do know an established boundary for the San Andres. We do not know the boundary. So don't you believe that the operator would have to spend more money to remove or to produce more water before they get, let's say, a barrel of oil?
Okay, so the assumption is if Goodnight injects water, that would cause Empire to remove more water in their operation?
That is where I'm going with that.
Okay, now I understand. And I think I would fall back on the pressure again, that if there's no pressure increase and you're just displacing water, I don't see how that impacts Empire's ability to implement an ROZ project.
So when Mr. West, when he was testifying, I asked him, did he include the withdrawal of the water, that the amount of water that needs to be withdrawn from the San Andres before they start even producing 1 barrel of oil? He said yes. So do you disagree with that?
If he's saying that that's in the economic model, I disagree with that.
Okay. Thank you, sir. I do appreciate your time.
Thank you.
Okay, redirect to Dr. Macbeth.
Thank you, Mr. Hearing Officer. Mr. Macbeth, do you recall during your last session of cross-examination with Mr. Waymire, you were asked questions about a PPQ analysis or do you recall that testimony?
I do.
And what's your understanding of what PPQ stands for?
Production in paying quantities.
And you understand that Mr. Waymire was asking you about whether you'd done that analysis, and what's the context in which that analysis is done?
It's usually done in the context of a lease that the lessor is alleging has lapsed because of a failure of production in paying quantities. It normally happens with the last well on the lease where there's very little production, and there's analyses that are laid out in case law and pattern jury charges that show what costs you should include and should not include to figure out whether or not the well is producing in paying quantities. And if it is, then the lease is saved. And if it's not, with some other extenuating circumstances like prong 2, then the lease is lapsed. But it has no applicability to a project that has not been implemented and considering large capital expenses and making a decision on whether to move forward.
No, to that point, did Empire include capital expenses in its economic analysis?
Yes, they did. They have it in there. I didn't change any of those.
Okay. And you just used what Empire had done, and so you did not exclude any capital expenses from your analysis, right?
That's true. Yes.
Okay. I think, and you testified that, as you just explained to me, that you're familiar with a PPQ analysis, at least under Texas law, right?
That's true. I've had a couple of cases in New Mexico that never made it to trial, so we noodled on it. I'm aware that maybe the case law is thinner in New Mexico on this issue.
Based on your understanding of what a PPQ analysis is, did Empire itself undertake a PPQ analysis?
No, they didn't, and I don't think it's appropriate here, but no, they did not.
Okay. Do you recall questions during the last session from Mr. Waymire about who was in the best position to do a coring analysis in the EMSU, Empire or Goodnight? Do you recall that series of questions?
I do.
And do you recall the previous testimony that Empire acquired the EMSU in March of 2021?
Yes, I do.
Are you aware of any reason that Empire could not have cored a well at any time between the time they acquired the unit and today?
I'm not aware of any reason they couldn't have drilled a well and cored it.
Are you aware of any reason that they cannot go out and core a well now?
No, I'm not.
And that would be true for any of the three units they operate, the EMSU, the EMSUB, or the AGU, correct?
That's correct.
And Mr. Macbeth, you did some review of where Goodnight's injection wells are located, correct?
I did, yes.
Do they have any disposal wells or injection wells operating within Empire's AGU unit?
No, they're all limited to the EMSU unit, EMSU.
Do they have any disposal wells operating within the EMSUB unit?
They do not.
Did you hear testimony from Empire's witnesses that they were ordered not to do any further work on their CO2 project until disposal was ceased in either all of their units?
Ceased. I don't remember the distinction of all of their units, but yes, ceased.
Okay. And again, to your knowledge, Goodnight's not injecting any disposal water or produced water in the EMSUB or AGU, correct?
That's right. That you're right. It's a moot point on those. Yes.
Okay. Do you recall today, Mr. Macbeth, when Mr. Waymire was asking you about whether you conducted any analysis to determine volumes of CO2 that may be needed? I'm sorry, let me strike that. Do you recall during Mr. Waymire's cross-examination of you where he was asking you whether you evaluated or changed the amounts of CO2 that might be needed under Mr. West's economic analysis?
I do with respect to the pressure issue. Yes.
Okay. And you recall Mr. Lampkin or Commissioner Lampkin's questions about what your estimate is for what the additional volumes might be needed, or how much volume of CO2 might be lost in the formation in this particular area. Do you recall that?
I do.
And you said it was something you expected to be somewhere on the order of 2 to 3 times. My question is 2 to 3 times what?
2 to 3 times more than is assumed in the economic model of Empire based on that dimensionless curve.
Okay. And you didn't run an economic analysis based on your estimate that 2 to 3 times more CO2 would be required, did you?
No, I did not.
Okay. Do you recall Mr. Waymire asking you today about the variables that you analyzed in Mr. West's economic models, or model rather?
I do, yes.
And do you recall Mr. Waymire stating that that economic model was representative of a project that Empire intended to carry out?
That was certainly the implication of his questions.
Based on the economic model that you reviewed, is it, in your opinion, Mr. Macbeth, is there sufficient analysis in order to carry out a CO2 project based on that economic model that you reviewed?
No, I would characterize that calculation spreadsheet analysis as at best, the beginnings of a scoping analysis.
Now, do you call Mr. Waymire's testimony today, his cross-examination of you, where he was asking whether you yourself had calculated a recovery factor? Do you recall that?
I do.
And I want to make clear, Mr. Macbeth, did Empire itself calculate a recovery factor?
No, I don't think I'd say they calculate one. There is one implicit in the dimensionless curve that they used. And I talked about the genesis of that curve, but if they just assumed 3 pore volumes, hydrocarbon pore volumes of CO2, it would equate to a recovery factor of 18.5%.
You may not recall this, Mr. Macbeth, but do you recall the slide that Mr. Waymar showed you, where he was asking you about whether or not or why you didn't use the EIA pricing in your economic analysis?
I recall a slide with some yellow highlighting on it. Yes.
Do you recall below that yellow highlighting, there was some information about what that 4-county study used in terms of a price escalator for CO2?
I don't know.
Does Empire use a price escalator for CO2?
No, it was a flat CO2 price. Whether it was $1 or $1.50, it was a flat. I'm sorry, theirs was flat at $1.
Whose was flat and $1?
Empire's was flat
Right.
at $1.
But they used an escalator for their oil pricing, correct?
That's right.
But they didn't use any escalator to account for increasing CO2 costs, did they?
That's correct.
What's your opinion on whether it's reasonable to assume that CO pricing is going to stay flat? Is it conservative, or what's your opinion?
Well, it's the longest term CO2 contract I've seen in all the work I've done, whether it's sourced out of McElmo Dome or Bravo Dome or Sheep Mountain, is I think 15 years. So at some point, you're going to have to be renegotiating, and I doubt very seriously that the price is going to be the same.
Now, during the cross-examination today from Mr. Waymar, he mentioned, at least at one point, that Empire might be considering 10-acre to 40-acre spacing for its CO2 injection project. Do you recall him asking you about that range of spacing?
I recall him mentioning 10 acres, yes.
Have you seen anything in any of the materials, records, testimony about Empire considering or looking at 10-acre spacing?
No, I have not. And the economic model assumes 40 acres.
What would it do to the economics if you were to, just in terms of, what would it do to go to 10, what would it require to go down to 10-acre spacing?
Requires a lot more wells, new wells, more expense, and you hope it increases the recovery.
Okay, but you haven't seen any analysis from Empire reflecting any consideration of 10-acre spacing, correct?
That's right, I haven't.
There was some discussion about your effort to substantiate CO2 pricing in your criticism of Mr. West's analysis. Do you call that cross-examination today?
I do.
And do you recall seeing anything in Mr. West's testimony or in Empire's materials substantiating their basis for their assumption of their CO2 pricing?
I do not. Only that it was stated.
Do you recall cross-examination today, Mr. Macbeth, where Mr. Waymar was asking about discussing about the potential for high grading a location for a one-section project in the MSU? Do you recall that cross-examination?
I do, yes.
Are you aware of any effort or report, study, analysis on Empire's part to identify or high grade locations with the EMSU?
Not in the documents I've seen in this matter or in the testimony so far.
You recall the testimony from Mr. Waymar about the potential benefits to New Mexico in terms of royalty?
Yes.
And Mr. Waymar asked you that would be a substantial benefit to the state to be able to, he showed you a chart, I think, that had some royalty values on it. Do you recall that?
I don't recall the values. I remember him asking me about it, though.
Now, isn't it true that in order to receive any royalty, there actually has to be production, correct?
That's right. You have to have a successful project for those great benefits.
Okay. And in order, and in that same chart, I believe he had, or referring to that chart, Mr. Waymire was asking about the benefit of royalty over a 40-year period, which is a long period of time, isn't it?
It is, yes.
And again, you'd have to have production over that entire 40-year period to see any benefits, wouldn't you?
You would for royalties or taxes or things like that.
Mr. Macbeth, during Dr. Ampoma's discourse with you, his questions, he asked you whether you had conducted an economic analysis using Empire's model to evaluate what the model would say about a 20% oil saturation. Do you recall that?
I do, yes.
And you discussed some of the considerations about using a 20% oil saturation. But one thing you didn't mention was one of the assumptions you discussed in your testimony, which is the use of dimensionless curve. Will you explain, if you would, how you would, what consideration you would give to just relying on a 20% oil saturation analysis and using Empire's economic model while also relying on the dimensionless curve that's inherent in that model?
So the genesis of that curve is not well understood. When we asked about it, we were given a paper, and I've gone over this a couple of times, that principally uses the curve to calculate how much CO2 would be needed to theoretically flood all the fields in Wyoming under miscible and immiscible conditions. And in the curve that's presented in, I think it's figure 4 of that paper, there's kind of a comparison to a San Andreas curve. And there's no discussion of where that comes from. Based on the age of the paper, it's more than likely that that's a main pay curve, because there weren't a lot of ROZ projects around when that paper was published. So main pay is going to have a lot more continuous oil saturation. There'll be a lot of data to back up a dimensionless curve like that. Many fields, many projects, much less so when you come to an ROZ project, and in particular, an ROZ project that starts getting on the boundaries of what's been shown to be economic. So I'd have some real concerns of just blindly using that curve to estimate that.
Okay. I think we'll hear more from Dr. Lake on some aspects of that, correct?
I believe so. That's true.
Okay. Now, another question that Dr. Ampoma was asking about, it was about potential impacts to a CO2 project relating to the need of Empire to have to remove additional water. So if Goodnight is continuing to inject into the zone, and if Empire were to proceed with a CO2 project, wouldn't they have to remove water? And you responded that based on the pressures, it's not your expectation that would be an impact, correct?
That's true. Yes.
Okay. Now, just so I'm understanding, is the point that the disagreement you have with Mr. West is because Mr. West is assuming that the San Andreas and the disposal zone would be pressuring up? Is that the genesis of the disagreement?
I think so. I believe that's right. This issue kind of popped up near the end of his testimony, and all of a sudden there was discussion of what about removing water. I presume it has to do with his assumption that you'd be pressuring up and therefore have to remove water to get down to the same pressure. I don't think that's an issue based on the performance of the San Andreas disposal zone.
Okay.
Mr. Rankin,
Yep.
could you just stop screen sharing
Oh,
so we
sorry.
can see the witness bigger
Apologies.
picture? Yeah, thank you.
Apologies.
Mr. Hearing Officer, I have no further questions of Mr. Macbeth.
Okay, thank you. Then may this witness be excused.
For Empire, yes.
No
OCD,
objection, Mr. Hearing Officer.
Rice,
No objection.
Pilot,
No objection.
Mr. Macbeth, thank you for your time here and last time we saw you.
Thank you.
All right, so it's 4:20 p.m. Let me look and see who I have on your witness list. Who would be your next witness?
Mr. Hearing Officer, next witness would be Mr. Alleman, who is available, I think. I would ask just for a moment so I could use the restroom and maybe talk to Mr. Alleman and make sure he's also ready and make sure we have our materials ready to present. I think we could, I think we could probably get it done by 5 o'clock, is at least intro slides. That's my expectation.
Wow.
But
That's that would certainly set a record in this case.
well, there are some witnesses that have more materials.
Okay, let me hear from Mr. Rosatos. What are your thoughts on this?
I'm okay with that if Mr. Rankin thinks that he will finish in time. As you said, Mr. Hearing Officer, that would be definitely a record if that were to happen, especially with our track record on this case. So I leave it to your discretion.
May I make a small interjection? I guess my thought is if I take a 10-minute break, that's 4:30. I'd hate to disappoint anybody by going much past 5. So I guess my thought is I know we have to not start until 10:30 tomorrow, which is a factor and totally understandable. I'll leave it to the hearing officer. I'm welcome. I'm happy to go forward at 4:30, but I'm also happy just to start again at 10:30 tomorrow morning.
Well, let me ask you, you guys haven't had much time to talk about the scheduling issue that we raised, that I raised earlier today. So one option is you could use the rest of, we could clear out and you guys could use the rest of today to discuss those issues and maybe agree on time limits. Since this case is heavy on modeling, I've done a little modeling of my own in terms of time and numbers of witnesses. I think we have either 5 or 6 witnesses left, 4 for Goodnight and possibly 2 for OCD, although it may be 1. But if we err on the side of caution, it's a total of 6 more witnesses. We have a total of about, through Wednesday of next week, if my arithmetic is, not next week, but next time we meet in May, if my arithmetic is correct, it's about 31 hours. So with 6 witnesses, that's about 5 hours per witness. That would mean maybe an hour and a half on direct, an hour for cross for Empire, half an hour for cross for other parties and interveners, an hour for the commission, and an hour for redirect. These are just numbers I'm throwing out for discussion purposes, although, you know, the amount of hours in our day are pretty well settled. So that's the option. I mean, we can start with the witness today, or you guys could use the time to discuss whether or not you could agree to timeframes for the rest of this proceeding so that we can get through it by no later than Wednesday of the week of the 19th of May.
I appreciate that, Mr. Hearing Officer, and I appreciate your modeling. Would you mind sharing your model with us so we can do some due diligence?
Not much to it. I'll give you my 2 Post-it notes.
And that was actually going to be the subject of a motion from Empire, and we'll certainly confer. But just given the incredibly lengthy direct examinations that have occurred during the Goodnight case in chief, we were going to make a motion that directs be limited to an hour. I mean, this started as 15 minutes. Some of these things have gone 2.5 hours on direct, which is far afield of what was laid out. Additionally, the cross-examination, part of why we're at this place time-wise, the cross-examination of the Empire witnesses were quite lengthy and meandering. And I think for the part of Empire, we've done a better job of keeping this narrowed down by way of time and focusing in on the relevant things. So we will confer. I think there's going to be a motion to limit direct from here out to an hour so that we can get these things done. And again, these are witness statements that have been filed. So the testimony that they're getting by way of their case in chief should be in the record. And that was reflected in the Empire case. The redirects were quite tight and compressed. So we'll confer with Mr. Rankin, but I think what you'll be hearing back, failing agreement, is something in those lines.
Well, hopefully you guys will be able to agree on something, given the time frame, so that you don't have to have a motion. But of course, if you do, you do. I do remember Ms. Hardy at the outset saying that direct examinations would be about 15 minutes each. So I think there's enough guilt to go around on both sides for lengthy direct and cross examinations. I've handled a lot of cases myself, and significant, important, big cases, and I don't think I've ever seen cross examinations that went this long. But my cases didn't involve these kind of complex technical issues. So I understand the need for people to take time in these cases. But hopefully we
Hearing
can work
Officer?
it out.
I apologize to interrupt, but I
No,
mean, we've already now been talking for a little over 5 minutes. So it's already pushing us to the 4:30 time mark. And then with a 10-minute break, it would probably be best that we follow your direction. We break here, let the parties meet together to try to find a consensus for the time frame. And then we can start up first thing in the morning at 10:30.
Works for me. I'll provide everybody my quote unquote model, and you guys can take it from there. All right. Well, thank you everybody for your time here today. We'll be off the record today. We'll be back tomorrow, not so bright and early, at 10:30 a.m. Thank you.
Thank you.